Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 24th of April. The sun is still shining and it feels positively spring-like. How's your week been, Kev? All right?
It's been good. Just getting used to the change in climate here, and everything's shorts and t-shirts now. So it's the jumpers and the coats have been put away. But I'll be coming to England in a few days, so it's going to be
scaring people and running around in your shorts and t-shirt. You know, that must be a sight for sore eyes.
Or indeed, it's going to be the opposite when I come to England. I'll probably be freezing to death all over again.
Yeah.
And then, really excited that we're going to Dublin, and then we're going to West Virginia via New York. So that should be exciting to go and see some of these other companies. So getting on with things.
We've got to do our bit for the carbon footprint, right? You know, keep those miles up. Right. Yeah, miles up and everything.
Yeah, we're going to focus on all these green companies, but we're going to fly.
Right, exactly. So, that brings us on to our guest. Today, we're joined by Suresh Withana, Director of Harmony Capital Investments, who are the founder of Aura Renewable Acquisitions. Welcome, Suresh. How are you?
I'm very well. Thank you very much for having me on. Pleasure to be on, actually.
No problem.
Yeah. Welcome, Suresh.
Yeah, very good to meet you both.
We know, obviously, Aura Renewable listed, I think, probably just at the start of April. And we know it's a SPAC or cash shell or whatever term or acronym you wish to use for it. Do you want to tell us what sort of targets, maybe in the renewable energy space, that you're looking for, please?
Yeah, happy to. I mean, it's a special purpose acquisition company, or SPAC, which is a word that gets bandied around a lot these days, but it is designated as that, a SPAC. It's listed on the standard list of the main market of the London Stock Exchange. And as you quite rightly said, we brought it to market, or it IPO'd in early April. It's been set up with a very wide mandate, which will obviously focus and narrow over time, but it has the ability to acquire or make investments anywhere in the renewable energy space, the global renewable energy space, and basically anywhere along the supply chain of the global renewable energy space. So oftentimes SPACs will target a very specific segment and say, well, we want to do X in this market specifically, or they'd be geographically tied to UK only or Europe. We came to market with a much more global mandate because firstly, renewable energies is a global market. And there's a number of sectors, as you can well appreciate. There's wind, there's solar, there's biomass, there's hydro electricity, all these different ways in which to generate power. But the other thing is, a lot of people don't really focus on the fact that there's an entire value chain, or behind how you end up getting electricity or power from this renewable energy source. So just as an example, a wind turbine. Well, who makes the wind turbine? Who manages the grid? Who manages the software? Who builds the software that tilts the turbines so that they're facing the wind? Little things like that. That's all part of the supply chain or the value chain. So we can invest anywhere along that value chain and in any of those sectors, and that's what we set the SPAC up for.
So we've seen other sort of SPACs within the renewable energy space come to market. I think one came in March with a much higher market cap. What do you think are the key differentiators between Aura and its peers?
I think the differentiators could be, and again, I don't want to, speak about what I don't know, which is other SPACs, but I can tell you about our SPAC. The first thing is that the first thing people should look at is the board, because the board runs the SPAC. And if you look at our board, you will see people with renewable energy experience in their histories, in their work histories, actual renewable energy experience and exposure, and very current exposure, as well as directors who have a lot of experience in running public companies in London. So there's a really nice mix of, capital markets experience, governance experience, and renewable energy experience, all on our board. So I think that's very important. I've seen a number of other vehicles in the past, which, are either very heavy with industry experience and light on capital market experience, or the other way around. And I think we've got a nice balance and a nice mix on our board. That's number one. Number two, we didn't come to market with a high market cap or a lot of cash in our bank account, because firstly, we started this process in 2021. And at that time, the rules but from the FCA were different. Those rules changed, as you know, in February, or I think it was February this year, whereby the minimum market cap is for SPACs has been increased to £30 million. But previously, I think it was £700,000 or something like that for a SPAC. So we are grandfathered under those old rules. That does not preclude us from doing very significant transactions in the future, but that would be, in concert with investors supporting those kind of transactions. But for listing, we did what was required to get to market. And as I said, our differentiating factor is this global remit. A number of the SPACs that you're mentioning, which we've looked at, have very geographically focused mandates. So either they're UK focused or European focused, whereas we want to look globally to see where the best opportunity is potentially for shareholders.
Back onto that valuation in a moment, as you said, it's sort of just over 1 million at the time of admission to the main market, at a time when, as you rightly say, the FCA moved the goalposts, as you say, which was in December of last year, from a minimum of 700,000 to the 30 million minimum rule, minimum valuation of the company, which obviously excludes a lot of, small startup companies. So that kind of forces them to, and even AIM did the same as well. There is a minimum now on AIM, I believe. So it kind of forces them onto the aqueous market. And there is a little bit of reticence, sometimes reluctance for people to invest on that one, probably due to illiquidity and electronic transfer trading of that stock. So really, you're almost a unicorn right now in that sense, in that you've got about £1 million cash in the bank ready for an acquisition of some description. You've got a market cap of probably about 1.45 now, because obviously the stock moved from 10 to 14 and a half. But it really is, the value could be anywhere from that 1.45 million up to the 30 million mark. How do you put a value on that?
It's very difficult, and you're quite right. The theoretical value of a SPAC today is somewhere between 1 and 30 million, because if today we decided that, okay, we're going to launch a SPAC, we're going to start the process, we have to have a minimum of 30 million. There's no way around it. And as you quite rightly said, and I should have pointed out earlier, because it's an interesting sort of angle, which perhaps people don't appreciate, is that because more and more acquisition companies or SPACs or cash shells are being pushed onto markets like Aquis. Again, Aquis has its benefits and its challenges. But what you also have to understand is how targets think about the London market. If you are trying to attract a good quality target, a good quality company that is, doing a good thing, is profitable, but wants to be listed or wants to be acquired by a SPAC, convincing a company, I don't know, in somewhere in Europe or even in the UK, and saying, well, by the way, we're listed on Aquis and we want to acquire you, is not the same thing as saying I'm on the main market. Like I'm in the main London Stock Exchange and I have access to the capital markets that come with that. It attracts a completely different set of targets, in my humble opinion. So I think that's another differentiating factor for Aura. But you're quite right about the arbitrage here, because the minimum market cap is now significantly higher than what it was when we were launching our vehicle.
So moving on to the renewable space, and obviously that's striking while the iron's hot, as they say, because obviously we're in a time now of an energy crisis, not only with the rising costs of obviously the fuels, the oil and gas, and obviously that we're in the middle, unfortunately, of the first land war in Europe for 75 years, which is obviously with Russia and Ukraine has just emphasized how much we're reliant on foreign supplies of these. The governments are the same thing. If you delay the onshore turbines and the renewable energy, that's ultimately is just going to increase energy bills, continually increase them. So at what point do you think the government really needs to make the stand and say, we need to invest more into renewable energy sector, into solar, into wind or whatever that is? Do you think there's kind of still that reluctance there? There's some people, you even hear about some, MPs and governments voting down onshore because it's an eyesore. When are we going to wake up to this?
I don't want to sound trite about this, but the fact is, irrespective of what is happening in the here and now, whether that's a land war, whether that's an expansion of hostilities, an escalation of energy prices because of supply-demand issues in the short term, the long-term fact remains that we need to move to renewable energy, or we're going to continue to harm the environment in which we live in. And that's not me necessarily preaching about anything. It's just science. It's fact. It's a well-known fact that if we continue to rely on fossil fuels, we will end up increasing pollution and pollution levels around the world. So inevitably, what we are looking to invest in, which is the renewable energy space, that is a train that's already left the station. It may be slowing down at the moment because of, like I said, short-term supply and demand issues, and people rightly concerned about increasing costs. I'm an energy consumer in the UK just like you are, so I don't want to see my bills go up 30% either. But in the longer term, it does matter to me, and it should matter to everyone that we are, getting our power from the sun or from wind rather than from coal or from oil or whatever it is. So I think inevitably that will happen. The momentum is far too great for us to go backwards in any form or fashion. I see these as temporary blips, which in of themselves create opportunities. As you know, these sort of things do create opportunities in the short term. So I think it's been purely by luck, it's been a great time for Aura to list, because people are exactly doing what you're saying, which is thinking about this issue that, okay, I've got energy bills rising. I understand there's a war. We're very reliant on, perhaps supply of gas and so on from places like Russia. What should we be doing? But it's bringing it into people's consciousness. And by the way, no one is saying that renewable energy is somehow a bad thing, or we're going to somehow scale back. And as I said, eventually governments will acquiesce, I think, to the inevitability of the fact that we cannot continue to generate power and pollute the country, pollute the world at the same time. I just don't believe that's going to happen.
Sure, it seems rather startling that you're on the main market worth 1.45 million with £1 million in cash, based on what we've talked about already. I mean, this valuation now looks absolutely ridiculous. Now, obviously, you don't own anything. It's simply the board. So tell us a little bit more in detail about the board, because effectively we're buying the board here. Whatever the board is worth is really got to be a good indication of what the SPAC should be worth.
Indeed. I think that's very important for people to understand about these kind of vehicles, and ours in particular, which is that I believe, and it speaks for itself, people can look up our website and see the board and their experience. It's there for all to see. But just very generally, we've got a 4-person board. We've got 2 directors, David Fitzsimmons, Guy Ranawaka, who are both from the energy space, who've got energy investing experience and have had renewable energy experience in their careers. And then we have John Croft and Robin Stevens, who are the directors who come with the more capital markets, the London capital markets and governance experience. And again, their CVs are up there for people to see. But what I like about Aura's board is that it's a balance. It's a balance between industry experience in renewables and global industry experience. So, for example, David worked for BP for many years and then transitioned into their renewables efforts in the latter part of his career. And you've also got people who understand how London markets work, how London investors work, how governance works, how the FCA works, etc. So it's a really nice balance. I've seen too many vehicles, in my opinion, and you've probably seen more than I have, where the balance tends to tip in one direction or the other. It's either lots of people who know something all about an industry and nothing about being listed, or a bunch of people who know all capital markets and don't know anything about the industry they're supposed to invest in, and neither is healthy. I think we've got that balance. And you're right, that is what investors are buying at the moment. And whether the premium is high enough or not high enough, I can't speculate. But I, like you, am a little surprised that. Well, I was surprised the market traded at a premium to cash, that the vehicle traded at a premium to cash. But when you really think about it, as we've discussed, given that a SPAC today listing would be at a 30 million market cap minimum, then I can see why, our vehicle trades at a premium anyway.
For it to trade at 2, 3, 4 million pounds, I don't think it's going to be a big ask before something happens, based on the quality of the board and what you're trying to do. I mean, those guys have not joined Aura for it to be a 1 to 10 million pound market cap company. I would take it.
Not at all.
These guys are in it for hundreds of millions to try and produce not necessarily a monster initially, but ultimately in time, if we're really moving towards these renewable energy sources over the next decade, this is going to be £1 billion company or more in time, you would imagine.
One can speculate, but let's let's talk about a few things, okay, that we know in the here and now. Firstly, we know that renewables, as you quite rightly pointed out, is a massive investment opportunity and a necessary one. Okay, we're not talking about just something that's trendy. We're talking about something that's necessary over the next 100 years. That's number one. Number two, this is a company listed on the main list of the London Stock Exchange, on the premium, on the standard list, but off the main market. Okay, London is the most international capital market in the world. It's something most people don't realize. It's not the largest capital market in terms of debt, but it's the most international in terms of the number of foreign companies, investors operating in this market. It's the second largest capital market in the world, next to the US. So you put those two elements together. Then you add the board, as you quite rightly said, who've got experience, who've done deals, who've invested in bigger companies, have worked for massive companies in the case of BP and others. If you just string those three things together, you can imagine that nobody's here to try and make a $5 million acquisition, potentially. Not that there's anything wrong with that, but I would say that it's a fair bet that this vehicle is looking to go big. Let's put it that way. Now, I'm not on the board, so I don't know what the board is thinking necessarily, but just taking those three things together, renewables, London, and the board, I would say there's a good chance that these guys are thinking big.
Yeah, and Harmony Capital is a big shareholder in this company, so you are not without voice, even though it may not be on the board. So the reality of the situation is you're going to be able to help them also raise capital for whatever project they decide on, I presume.
Yes, I mean, we are more than happy to assist the company because it's in our interest. As you quite rightly said, we're the founding shareholder, we're the largest shareholder at IPO. And so given our knowledge of not just global markets, but Harmony Capital as a platform, having offices around the world, having people around the world, and also having access to markets like the London market, the institutional market, etc., it is in our interest to assist the company make the right acquisition and hopefully make a profitable and large acquisition for the benefit of everybody, not just Harmony Capital, because if Harmony benefits, all shareholders benefit from that. So yes, absolutely, we'd be more than happy to assist the company in realizing its objectives in due course.
There are lots of renewable projects available, and I think, as we discussed before we started talking, it's not going to be a listed entity that you buy, or highly unlikely that it's a listed entity. Be a non-listed entity that requires more capital to allow it to grow and become even more profitable. But would it be fair to say that they would be looking at renewable opportunities that are already profitable, or are we going to be blue sky thinking here?
I think that's a very incisive question, because that's really about the direction in which this vehicle ultimately wants to take. Because is it betting on, for example, the next Tesla while it wasn't still Tesla, or is it going to look to build a solar farm factory and then a solar farm portfolio, and then continue to expand that and then pay dividends? So is it the growth path, or is it the kind of the recurring income path? Is that the kind of, which direction does this vehicle want? And frankly, the vehicle can go in any direction, because it's, as long as it's still in the renewable space. My sense is that the company would be looking for businesses that are already established, but like you said, possibly private, that would benefit from being in a public forum, thereby bringing exposure to the company, bringing institutional and retail money to the company, because being listed is a way to access capital that you don't necessarily access otherwise. You have to go to private equity firms and venture capital firms and stuff like that, and that's a different discipline. That's a different route to raising money. Whereas being public, being listed is an entirely different discipline. So I think, my bet would be that the company is looking for slightly larger private companies that are now not quite maybe there yet in terms of necessarily profitability, but at least are beyond sort of proof of concept, or it's not just you're not buying a patent and hoping that this thing turns into the next, like I said, the next Tesla. It probably a little bit more advanced than that, and as a justifiable business case for which it can then convince investors to give it money, right? That's the other point about going into a public forum, is to be able to convince investors that this is a good bet and here's why.
And one thing I noticed is that the UN climate science body almost admitted defeat recently, and they said that it's almost like the effects of greenhouse gases and pollution, carbon dioxide emissions were irreversible, and it almost has got to the point where we need to find an alternative to remove that carbon dioxide from the atmosphere. And one of the ways to do that was to look at alternative technologies like carbon capture. Is that something that you've ever looked at?
There are two things that, interestingly enough, I and our team have been looking at, just again separately to Aura, but just in terms of research and so on. One of them is carbon capture, the other one's hydrogen, and both are have game-changing abilities, right? As for the reasons you said, one of them is to essentially reverse or reduce the amount of emissions. And the other is to basically generate clean power. I mean, almost totally clean power through green hydrogen. The problem with both those technologies is that depending on who you talk to, and I'm not a scientist, so I should be very clear, but depending on who you talk to, you're either 10 to 50 years away from commercialization of these technologies, depending on, again, who you speak to. So does that mean that a vehicle like Aura should speculate in that? Because in the long term, yes, we know that hydrogen is probably going to be a viable commercial source of energy production, clean energy production. But do we wait 50 years for that to happen or 10 years for that to happen? I don't know the answer to that. And so while those technologies sound appealing and seem appealing and certainly theoretically are very appealing, I think practically speaking, as a listed company, you're probably going to find that an Aura would probably look at things that they can, kind of tangibly explain to the market as realistic contributors to the renewables space. That's why I think Aura would probably try to go towards companies that either have proven technologies, are beyond proof of concept, things like that. Those risks hopefully are eliminated. And now you're asking investors to fund growth and expansion.
If you buy something now that really doesn't have proof of concept and is just progressing through the process, this might be a purchase for Aura when it's paying out 5% dividends in 2 or 3 years' time, or however long it takes.
Not straight away. You're right.
But not straight away. I mean, effectively, I'm trying to imagine how the likes of BP, Shell started 100 plus years ago. How did they start? They were small companies that basically just decided, we're going to try and do energy. This was the deal, and it was through petroleum, and it was through whatever, and slowly but surely they became monsters. But the reality is, the way the capital markets work today, those monsters can be created much quicker.
Yes,
because of capital and also because of the sheer need of what is required. Because when BP and Shell started, we never used anywhere near as much petroleum or gas or anything else as we do today. So the demand is there. The demand has to be met one way or the other, whether that's through coal, gas, renewables. We need energy, so we've got to get it from somewhere.
Kevin, I think one of the interesting things that has now led, and we've seen it repeatedly, where companies, get massive scale quickly, is because also of technological, tectonic shifts, right? So, for 100 years, the only way a car could be powered was through gas, essentially petrol, which had to come from oil. Today, you've got petrol, you've got hydrogen, you've got hybrids, you've got electric batteries now, electric vehicles. And so that technology shift has suddenly accelerated the development of a company like Tesla. I'm just using them as an example, but from no one knew who Tesla was 10 years ago to now everybody knows Tesla. At least everybody knows Elon Musk, but Tesla, where it didn't take 100 years to get there, right? So I think that's also where the opportunity is. Now, I'm not suggesting that, again, just going back to Aura, that we are looking for the next Tesla. It's just that I think that there's always going to be opportunities that are going to be seen by companies like Aura that have essentially a blank canvas and saying, I want to paint something that belongs in the Louvre, but I'm starting blank. Now, let me have a look around to see what's around and where's the opportunity, and I can do that. I'm not already predestined to do one thing or the other with Aura. Now, at some point, as I said, the board has to focus. We can't just look for global energy opportunities all over the world all the time. There's a time frame. It has to make an acquisition. The board is very disciplined, which is why their credibility is very important. These are not the kind of people who have the time to just look at everything all day long and not do anything. These are serious people that are on the board. So you can imagine they're thinking through what areas do we want to focus on. But I really do think that it's an exciting time to be considering investing in the renewable space, but actually have kind of a blank canvas, as I said. And then be able to figure out what you want to put on the canvas.
Which is exactly what the likes of probably BP, Shell had 100 years ago or whatever, when they discovered, because they started and were in that situation when cars were coming to age and we needed petrol and we needed gas and we needed all of these different things for the industrial revolution as it started to occur. So this is a new industrial revolution that we're coming into, only powered by something different. I mean, ultimately, the industrial revolution that is headed our way is going to be one where we have to create many, many different things from metals that are scarce, from energy that is going to be not scarce, but we don't want to use it for the wrong reasons. So it's a very interesting time, I think. And, I'd be interested the type of areas that we think are profitable for these renewables. What do we think are the type of areas, or even, as you said, the chain? What things in those chains do we think are potentially very profitable?
When it comes to predicting the future, I like to keep things very simple. Okay, very, very simple, which is, as much as we all like to think we're terribly smart, and then we can predict the future. If we really could, I wouldn't be sitting here talking to you right now. I'd be retired on a beach about 30 years ago. The truth of the matter is, let's keep things simple. Okay, where is it that we really think there's going to be significant demand for, a product or products in the renewables or sustainability or the renewable space? Now, the first thing that leaps to mind to me is electric vehicles. And the reason for that is because even last week, Honda announced, and you may have seen this, Honda, the big car company out of Japan, announced that they're investing $60 billion into the development of electric vehicles. And people might say, well, that's a bit late because everybody else is doing it. Yeah, it doesn't matter. The point is they're doing it. And the reason they're doing it is because they themselves see the demand for electric vehicles going up almost vertically over the next 10 years. And in the same statement, and I would encourage anyone to go and Google it and have a look, there is a comment, I think, from the chairman or somebody from Honda saying that in the next 10 years, what they expect to see in the electric vehicle market in terms of demand for vehicles versus the actual supply of components like batteries is so mismatched that there is no way they can build the number of cars they think people want because they won't have the components for it. Right? They just won't have the components like batteries and all the componentry that goes into it. Now, that's just a simple, prediction about the future from not me, but from someone who should know better, who's a car manufacturer. So when I look at, when people ask me, well, where do you think the opportunities are? Like I said, let's keep it simple. We know that countries all over the world, including here in the UK, have made undertakings that, internal combustion engine vehicles are going to be essentially phased out over the next several years, whether it's 10 or 20 or 30 years. And so that's going to raise a huge amount of demand for their replacements, which will have to be, cleaner running cars, ideally electric vehicles, for example, or battery electric vehicles. So that's one market I can definitely see. Now, that doesn't mean Aura is going to buy an EV maker or wants to become an EV maker, but there's so much in that value chain all the way along, including
there's inherent flaws.
For example,
there are some flaws with EVs. You said there's the fact that they're an inflationary asset going into them to make them the graphite, the lithium. That's all absolutely booming right now. And they reckon even just this year alone, from January to March, the cost of manufacturing one EV has gone up $2,000 already. So if that continues, and they're prohibitively expensive to the masses anyway right now
already, absolutely.
So that's until I think China made one, a family one that it's like a box on wheels. It's like 3,500 US, which is obviously amazing. That's just economy of scale, right? But the other thing, did you see the announcement this week from Rolls-Royce, this SMR, this small modular reactor that they can put in? It's the size of like 2 football pitches, and it can power nuclear, obviously, running a small nuclear reactor, and it can power a town of about 1 million or a city of 1 million people for not much. It generates industry. They reckon it's going to create something like 5 million jobs between now and 2050, but it's obviously a long way away from actually happening. But the government are working with Rolls-Royce on this. So there's all these new interesting technologies coming out. As you're saying, it's just about identifying the one in the right area. And, you're laughing, really.
I mean, even just going back to EVs, and I'm not particularly picking that I'm not picking that as a sector to invest in. I'm saying that just looking at the fundamentals and the demand, leaving aside the cost metrics. So two things come to mind for me. If we are truly headed down the vehicle route where we're converting essentially all vehicles to some form of electric vehicle in let's say in the next 20 years, then whether you're investing in the vehicle componentry, there's a whole other element to this, which is infrastructure for charging vehicles, for managing electric vehicles with auto drive systems, which, as you know, Tesla and all these other companies are experimenting with. So these are all opportunities that require investment. So again, going back to Aura, Aura isn't sitting there saying, oh, well, we need to, somehow become an EV maker, as I said. Yeah. It's more about, well, if that's one of the areas of demand, well, let's at least look at that sector. Let's look at the value chain. Let's see where are the opportunities to invest. Now, it may be that it doesn't make any investment in that space at all. But when you ask me the question, where do you think there's going to be profitability, I think that's definitely one that's very obvious from everything we can see today.
It's very interesting, and it's like we're trying to pin the tail on the donkey, and we don't really even know where the donkey is. So it's interesting. I've alluded to this in the past as well in terms of all of these renewable resources. It's like, or not renewable resources, but renewable energy. It's like, are we going to buy a VHS recorder or are we going to buy a Betamax? It's like the old Betamax recorder obviously worked and many people had it for a while, but then the VHS became standard and that was basically what was going to be used. I think this is what's going to happen in the renewable energy.
Even though it was actually, Betamax was a far superior quality product as well, ironically, but the masses chose the lesser product.
Yeah, possibly because it was cheaper and more accessible or whatever. But the point is that in this renewable space, we're going to have a standard somewhere along the line, surely. I don't know exactly what that's going to be, but it's interesting with Tesla that we talked about Tesla, because you can't charge any car on a Tesla charging station. You can only charge a Tesla.
Right.
Right. So who's going to put the standard chargers in all over the world that's going to allow people just to rock up and charge their Honda? I mean, I like what you said about Honda, because the Japanese always think longer than everybody else. And then they probably execute much quicker after the thought. So the West tends to think about it for 2 seconds, start to execute, realize they can't do it, start again, realize they can't do it, start again, and then finally get it right. The Japanese think about it for a long time, go the right way normally, and then execute it quickly. Which one's the best? I don't know. It's like...
No, but you're quite right about standards. And that's also one of the challenges that we face. Because again, if we are talking about, and we haven't, by the way, gotten to, if you look at the pie of what is a polluting activity, human endeavor, we haven't gotten to shipping yet. We haven't gotten to air transport. As you guys were talking about, getting on a plane and flying off, which I'm doing in a couple of weeks, and I'm going to be polluting as a part of it. Hopefully, some of my carbon credit fees, whatever I pay on my ticket, are going to
plant a few trees before you go.
I'm sorry, but that's unfortunately that's all that we're capable of doing right now, which is pay the carbon offset credit or whatever it is on your ticket. But the truth is, we haven't even gone to any of those modes of transport. We're just talking about cars here. And so, the idea of standardization, for example, for charging, particularly in landlocked areas where there is intercity travel, intercountry travel, and so on, like the European Union, as an example, that's a huge challenge that is going to require not just, people to come up with a technology that works. The technology already exists. You just have to figure out which technology you want to use and make it the standard. The question is there going to be cooperation between governments, which obviously involves politics, which, and there's a whole range of dark arts that will then have to come into play to sort that out. So, I think your first question was your main question was actually very, very interesting. Are we going to invest in something that eventually becomes the Betamax of its generation, whatever that may be? And yes, obviously there is that risk. That is always the risk with technology, right? That was the risk that Tesla investors faced 2 years ago, or Apple investors faced 3 years ago, not 3 years ago, sorry, 10 years ago. Now, my view is that, again, I'm not a scientist, but my view is when it comes to car technologies, when it comes to battery technologies, there is such a global market for it that it can sustain more than one form of technology. There can be a Betamax and a VHS because they both do the same thing, which is record and replay movies in that case. I think we're talking about global markets here, ultimately. So the technology risk, the failure risk, if you have an already proven concept, is probably a little less, but it's still nonetheless a risk which has to be assessed.
Sure. Yeah, and there's obviously also the opportunity that Aura is going to invest in more than one project if it's going to spread its risk. So
yes,
this, I would imagine, is not going to be a one-horse race, whether it's now or in the future. You know, in just the same way as these oil majors we've talked about, they don't depend on one stream of income. You know, BP has more petrol stations and makes more money from convenience stores than maybe Tesco's does, to be honest with you, if we actually looked at the numbers. So there are many ways to skin a cat in terms of making money and diversifying within Aura. So yeah, I see it as very exciting potential. I mean, for me, it's massively undervalued. It can't be worth 1.45 million when it costs 30 million to have the same thing, if you like, going onto the market at the minute. Not saying for 1 second it's worth 30 million, 20 million, or maybe even 10 million, but it's worth more than 1.545 million in my view, anyway, that's for sure. And you'll also be in right at the beginning of a story of what's going to happen. So yeah, exciting times, and we look forward to hearing from you in the future.
No, I look forward to that. And thank you very much for having me on. I really enjoyed this discussion. And I would encourage people who are interested in Aura, as I said, just start with the board, have a look, make a few inquiries, look at these people, and you'll see what the caliber of the people who are at the helm. And then perhaps, take a look at, obviously, the opportunity that.
I'm sure we could chat for hours about all these things because it's all very interesting. So, Suresh Withana, Director of Harmony Capital Investments, thanks very much for your time.
Thank you, Phil and Kevin. It was a real pleasure. Thank you.
What are your thoughts on that, Phil?
I mean, obviously it's a SPAC.
Aura Renewables.
Aura Renewable Acquisitions, ARA is the ticker. We just discussed it. I don't want to spend too long on it because obviously conscious of time. But I mean, as a SPAC and as a SPAC on the main market that's got a list of, it had a listing valuation of about 1.05 million at 10p. It's moved to 14, so it's valued at 1.5, but they've got over 1 million cash. Yeah, it's a unicorn, isn't it? It's one of those that had the grandfathered rights for when they originally wrote the prospectus, and the minimum was 700,000. And obviously, we know it's 30 million. So yeah, it's I don't know how you value it, but I'm excited to see what sort of acquisitions are going to come out in the next few months or 6 months.
Yeah.
That's it. That's what it feels like to me.
But we've had similar SPACs, haven't we? We had last year, I think it was, we had Mustang and Critical Metals. But both of those went into the 20s and 30s in terms of pence, and in terms of value went to between 3 and 5 million pounds with nothing in them, just cash, just a small amount of cash. So this is one of the sort of things I can't understand with Aura. Maybe it's just people haven't got it yet and don't understand it. But I can't believe that it's only worth 1.4, 1.5 million when it has all this potential in the future. So it's got to be, for me, it's got to be worth 3 to 5 million pounds, you would imagine.
But is it as simple as just saying, oh, well, it's a main market stock and it's got a market cap of, 1 million. And therefore it's just the shell alone is worth multiples of what it's worth at the moment, even if they don't do anything, just go to sleep for 5 years? Or is it literally we're trying to guess what kind of acquisition the company would do, and therefore say, well, they wouldn't do anything for less than, which is like would have an asset in a final valuation of less than 2 or 3 million because it wouldn't be worth doing. I mean, which one is more important as a factor?
Well, there? I think in the very short term, the more important factor is that it's a shell and it's going to be worth X million. But longer term, from the discussions we had with Suresh, that they're looking to put between 300 and 500 million pound asset in this SPAC. So they're not going to be playing. Even if that does well, the chances of the share price going up from this level have to be like vast. because you only need a small increase of that type of asset size for you to do, exponentially well in terms of the share price.
Right. So you basically got a very cheap ticket to hopefully a decent destination.
Yeah, and it could move like Mustang. I mean, you got the right thing there, because Mustang had something similar. I think they had 20 million shares when they were on the market. Obviously, they've been suspended, but Aura have got there's 10 million shares, and they're held quite close. I know they are held close. So yeah, any buying on that will move the dial. It's as simple as that. I mean, 10 million shares. You find me many companies that have got 10 million total outstanding shares.
Well, no, I mean, it sounds like this. Obviously, having listened to your way of looking at the market for many months now, it's the shares in issue, the market cap, the listing. I mean, all those factors are all, and also what's the downside? I mean, that's the thing. I mean, the other, but then you might not believe in the upside, but I can't see much downside. I suppose that's the final bit.
You could argue that the downside will go back to 10p, but I mean, there's no money coming out, because none of the board, and the board looks very experienced and very good. None of the board are taking salaries until a deal is done. Yeah. So effectively, there's no cash coming out of it, basically.
How's your week been, gent? Been on the radar? Anything happening in obviously social lives and on the markets?
Well,
were you starting there?
Anyone, go for it. Talk over each other again.
Yeah. Well, I suppose the highlight of my week was getting over the line, officially with Lift Global Ventures. I think at times it was like sitting next to Mike Tyson on a plane, but that has finally been...
The little terrier behind you just keep digging and gnawing and tapping you on the head and everything.
Yeah, that kind of thing. So at times it was like that, but I've said it before as well. It has been taken longer than it was expected, but obviously if you've got Ukraine and you've got Omicron and other things like that, and then rampant inflation, it's not an easy time to raise money. But I think in the end, actually, the momentum started to grow. So we're slightly oversubscribed at the time of speaking, which is good, and ready to execute the financial, media, and technology investments that's on the tin. So I think it's quite exciting. The listing date's the 29th, so on Friday we'll be ringing. I'm sure whether Aquis has a bell to ring, but I'll find a bell somewhere. And good to go. It's in fact, it's been long in terms of the raise, but actually it's been, I think, a journey of about 35 years from me starting in the stock market to getting here. And obviously, if you love the stock market, being CEO of a listed company is, basically, joining a rock and roll band, or being in the Beatles.
Your life goal. So that means that effectively from this coming Friday, then people will be able to buy that stock through their brokers listed on the Aquis exchange. The ticker is LFT, I believe. So yeah, I guess it'd be interesting to see how that one starts on that coming Friday.
Yeah, I mean, I'm hoping to get a bit of positive read across from Elon Musk's attempted takeover of Twitter. So I'm hoping that people will decide that the two things are related. The only thing which is related, I suppose, is Twitter has been such a great driver of speculation in the financial markets, and it's now the gold. Every listed company has a Twitter feed. And that one of the reasons of wanting to get into the financial PR, the digital financial PR area, is that Twitter is one of the things that drives it. So if I can sneak some of the glory of that, maybe that's something to think about. But I think the idea that, on a more serious note, you'd think that Twitter's been around for 10, 15 years, and we've got everything we can get out of it. But if Elon Musk's looking at it, I think he's going to come up with some bigger and better ideas. Yeah. And hopefully that will help, companies on the stock market with their Twitter feed, and all the private investors. I think we sort of feel that we know all the people on FinTwit, all the good, the best investors. Obviously, there are a few of the worst ones, but luckily, there's a lot of talent, a lot of education on there. I think I've learned as much, in the last 10, 12 years from the Twitterati as anything else, so that it really is a great source of education if you know how to use it, which we're all there.
I hope that it doesn't, if it does get some sort of controlling element of it or total control, it doesn't drive away users for some reason by almost trying to make it too smart, because the simplicity of Twitter is what makes it super interesting and enjoyable to use for me. But you announced this week that 50 billion's been wiped off Netflix's value as obviously subscribers run for the door. I think, as I say, there was something like 200,000 just in the last month or two alone. I mean, what are your thoughts? I mean, this is a company that started off as Love Film and effectively bankrupt or closed down the Blockbuster Video as we knew it with their kind of new online rental system. And then they said, yeah, we're going to aim to stream all of our movies eventually, and we'll go away from the rental model. And what they've achieved has been nothing. That they've been revolutionary in the they changed the face of the way that people watch television, watch documentaries, movies, whatever. And it's edgy, but I just wonder whether there's two things here: whether we're starting to see a more woke kind of content on that platform, which is actually turning people off. When you see some of the documentaries and some of the programming content, you just think, what on earth are these guys doing? I don't know what your thoughts are on that.
It's almost, I think it's going to become an issue right across the board. And I think it's a creative crisis. And I think the woke movement, which obviously I'm clearly not pro-woker, is something which is going to erode creativity. And as we all know, there's many songs and many books that would now never be allowed to be written. Yeah. That got through the net, and I'm sure they'll start. You won't be able to buy old series, I mean, I've got I love all the stuff from the 60s and 70s. That's when I was young, but I'm sure a lot of it will be like a sort of book. We've already got a book burning thing going on, and I think that's the real problem for Netflix. Over and above, people just $15.99 a month now. I'm not paying for that. I've got a gas bill of 500 quid. So, the two things don't tie up.
I think there's been a whole campaign across the US for evangelical Christians to dump Netflix. So they're going to have big problems because and it is woke. It's like this goes, but this doesn't go, and it's almost like the media is very powerful, and it's choosing basically for people what they want to watch or what they want us to watch. And that's scary. And I think that's where Twitter comes in, because I think Elon Musk genuinely wants people to be able to say what they need to say, right or left, middle, doesn't matter. Say what you want to say. If it's abusive, then stop it.
I wish it was 1984 now. I think there was
38 years later.
Yeah. There was a sweet spot, I think, in the late 80s, maybe, or early 90s, just before political correctness came in, which came in basically after the fall of the Soviet Union.
Orwell having the last laugh. This dystopian society predicted is actually playing out very, very nicely, isn't it?
Yeah, and you've got your phone listening to you and all that sort of stuff. It's brilliant, isn't it?
Yeah, exactly. Right, now we've put the world to rights. Let's move on to actual stock talk. So let's go through some RNSs then this week that have moved the dial on a few stocks, starting with Tuesday. Obviously, Monday was a bank holiday. We had Power Metals, the commencement of drilling at the Botswana project, which was very well received. We had Empyrean Energy, EME, which is one we've talked about, drilling offshore and China, block 2911. Jade drilling update, which said that obviously higher values of methane, elevated methane ranges. So basically, I think they validated that the interpretation of seismic, Jade and Topaz, has been pretty much in line with their estimation. So any thoughts on those two?
Empyrean seems to be very, very positive and very likely that they could hit petroleum. And if they do, then the size of that target, I think, is going to be huge. And you're probably talking maybe 3, 4, 5 times minimum the value of what it is now if the target is hit and oil is agreed. And obviously, I think Jade is only the first target. And once Jade has been assessed, then we move to Topaz, I think it is. And if Jade is a success, it seems the probability of Topaz moves up drastically. So yeah, I think now it's a punt, isn't it? If it goes, you're gonna make many multiples of your money. If they find oil. If they don't, then I don't think the downside's huge. I think you might be talking about going back to 6, 7, 8p, because effectively they've got this gas sale to go in the Far East, I think it is, which probably makes up a good proportion of the current market capitalization. So I see it as a bit of a free hit right now, not a complete free hit, but I think if they find oil, it's going to be, hell of a return, I think. The other one, Power Metals Resources, to be honest with you, I haven't really followed that closely enough. But in the same way as CDL, Cloudbreak, it's basically got that many projects that it only needs one or two to come good. It's worth £22 million now. One or two comes good, it's going to be several factors of what it is now. That's my opinion on it.
There's a lot of excitement, isn't there, around this stock, actually, when you look on the groups and on the boards, and Paul Johnson seems to be steering it in the right direction. I don't think that the SP has performed very well in the last sort of 6 months, but actually it does. When we talked to him, it's probably a month ago now, he seemed very driven and really keen to get that value out for shareholders. So good luck to him.
Yeah, and a year ago, that, and more things have progressed since a year ago. It was worth more than 2.5p, and now it's 1.5p. So, and only a few days ago it was 1.35p. So it's starting to move. The volume has been going up, and I think people are starting to slowly click on. The same a big opportunity there with CDL this week as well, because it absolutely bombed. No apparent reason. Went down to 3.5, 3.6, I think, or 3.7 was its lowest, I think. It's recovering now. It's up at 4.5p now. So it wasn't that long ago that was hitting highs of 12p.
13.5 was the highest, yeah.
Yeah, and absolutely nothing has changed. If anything, just added more projects.
Yeah.
So how'd you work that one out? It doesn't make any sense.
Well, I know it's one of your favourites, Kev, but actually we got the privilege of doing an interview with the new CEO, Callum Summerton of Chill Brands. So I think we pulled out, and I know Zach's spoken to, I think, Trevor Taylor in the past, but to actually get him on was quite it felt quite a privilege. And I think one thing, the take home from that for me was the fact he's 26 years of age. He's an entrepreneur. He's had some very interesting businesses in the past, and he actually blew me away, if I'm honest.
I've spoken to him in depth before, obviously, but I think this guy's got his head screwed on for 26 years old. I don't think he intends to fail in making this happen. So I think there's going to be positiveness going forward. With all of these things, I think there's going to be bumps in the road, and there's going to be requirements that need to be done. But I just see it's such an opportunity with Chill Brands now. I mean, if you look at its valuation, it's valued at like 10 million quid, and has the opportunity to probably have revenue of that amount within a number of months, whether it be 6, 12 months, based on all the things he talked about, both on the interview and off the interviews.
Bradderhead Lithium, we talked about this briefly at the end of the last one, and Zach, you mentioned you talked to Charles Fitzroy, I believe it is, the CEO. They announced start of drilling at Eureka, since that's the third drilling target since the IPO. Obviously, they had an oversubscribed placing. So, any thoughts on that? And there's always a mention, isn't there, in these about the not far from Tesla's Gigafactory and Albemarle's existing Silver Peak Lithium. Any thoughts on that one? I mean, it was a well received RNS, but it didn't really seem to move the dial too much.
I think the stock price is probably still trying to eat through the fundraise. So, and I think that given that the shares they're not far off, they're still not that far off their peak. The main thing here, as I was suggesting to Charles when I spoke to him, was that it's much easier to try and maintain a share price and allow one to go back and then have to build it back up again. And I think that the sentiment is so good towards this area. If they they have what they think they have, and I think they've got plenty more to sort of discover. Less than 50 million for this company is very, very cheap. And if you just throw in the Tesla aspect and being within spitting distance, whatever that distance is, of being able to supply a company like that, then it's a dream. I suppose it's a bit like the Ben's Creek that you've got that just geographically it's just really lucky to be where it is, and this company has the same. It's not you're not trying to export it from the middle of Africa or the middle of South America. I mean, this is good stuff, and that's such a massive advantage for companies like these. I think maybe even Emerson has an advantage being relatively near, to the places where they will supply. So fantastic, really.
Yeah, I really like Emerson as well. I think that's another one that's sort of on the radar as being massively undervalued. But obviously, once hopefully they get the financing in place for the next stage and all the capex sorted, I think they can start getting all that potash out the ground and, as you say, moving it to market pretty easily from the sort of presentations I see. Keeping on the subject of resource sector, or mineral sands in particular, Capital Metals CMET had an RNS out, I think it was on Tuesday, stating that they'd done the drilling. Obviously, they looked at 50% of the assays, auger drilling completed, and there was some very high levels of precision, basically very high grade results, plus 30% total heavy minerals reported. Yeah, thoughts on that one really, and obviously, Sri Lanka, as we know, is going through a pretty torrid time as a country with government protests, the energy blackouts, real power issues, almost hyperinflation levels going on. So it's not. I mean, it's a safe jurisdiction naturally. That there's been troubles, as we know, in the past with the Tamil Nadu and obviously the Easter bombings in 2019. But I do feel like this project is pretty undervalued now from a comparison to someone like Sovereign, who've got a cap in the couple of 100 million, and then you've got Capital Metals down in the low sort of like 10-15 levels.
15 million market cap with 14.6, and you just look at the last 12 months and they've progressed the project quite a lot, and it's down over 40% in the last 12 months. So that really doesn't make a lot of sense, to be honest. Only 190 million shares in issue. And I think it's got very, very good upside potential to be worth many factors of what it's worth now. I think the Sri Lanka thing's a misnomer, to be honest. I don't think there's going to be any problems with it.
Yeah, no, I was just going to say, I think the thing that you should remember with, say, Capital Metals, and there's a few other companies that actually, adhere to their timelines. And I think Capital Metals, they get their timings correct, whereas the market's treating it as if it's a company which doesn't do that. And I think that's an impressive part of what they're, what the company is, that they're just, they're progressing well. 9 out of 10 companies, they don't. They miss all those. They say, "Oh, sorry, there was a delay here. There was a this, that."
Yeah,
there were leaves on the line, and I think that it's one of the keys. I think to investing in the mining space is to try and find those companies that hit their timelines.
Moving on into a totally different area, the kind of fintech space. Cornerstone FS had the RNS, I think Tuesday as well, stating that they had strong revenue growth. Q1 of the unaudited results blew away, but certainly exceeded expectations, and that I think it was about 30% up. What are your thoughts on that one? Because I know that one moved the dial actually. Well, I'm just looking on the chart here for the best movers on the market this week, and that sort of CSFS comes in at 46% up on the last 5 days since the last podcast. So it's had a good week really. So anyone who's listened in the past and obviously heard our interviews with Julian and hopefully taken note should be staring at a little bit of profit there. So that's good.
Well, as Julian was nearly crying when we were interviewing him, and the share price was, the market cap was 4-point-something million pounds, and now it's looking at about £6 million. It's moved the dial, but actually it hasn't really moved yet. I mean, it's like still ridiculously cheap.
Yeah, and again, there's 23 million shares outstanding on it. So again, if there's any interest in this, and actually when it gets on the radar, and they're not far really from being EBITDA positive, are they? Really, they're not too far. They're probably only 1 or 2 acquisitions away from that.
Yeah, but the interesting thing about that RNS was not the revenue. The interesting thing was that the margin has gone up from 29% to 51%. So basically everything that comes in terms of what they're making 51% margin. So half of it is going straight to the bottom line. This is a massive increase. What's that, like 80% increase in margin? Like, no business normally goes 80% increase in margin. Just doesn't happen. Why have they done that? Because they've gone from white labeling stuff to doing it in their own name, and they're now getting into companies and into their accounts departments. And once they start doing that, they're going to be part of the business. So as things move on, and they get more and more businesses online, it's just going to be, it's to me, if I draw a picture 2 years from now, this is going to be a cash cow, nothing but. It's just going to produce cash. Yeah. And really, there probably shouldn't be a reason why it stops, because they're going to embed themselves in the companies as well as the property market. And the property market's not going to stop, is it? It could slow down, it could get hotter or whatever. But the company bit is not going to stop once you're embedded within the company. And that to me is the exciting part about this company. And the other exciting part about this company is Julian himself. Yep. Julian, for him to be managing such a small company in terms of market cap is quite something, because he's had a lot of experience in much bigger things. And he knows what he's doing, he really does. He's a good guy, and I can see that this is good. I just feel this one's going to do well. And what did it list at? 62p?
So 61p was the IPO, and it sat at 17, and it's now around the 24, 25 mark. So the upside here, and it's ridiculous, isn't it?
So I think anything under 40, 50p is going to be a good buy. But you've got the opportunity now to buy it at 23p or 24p. I think it could be paying you 10, 15, 20% dividends based on the current price now, I think within a couple of years, once it gets EBITDA positive.
Well, I actually looked at the chart, and I think it was sort of 17, 18 or whatever it was then when I covered it. And I just think it's actually in a formation that'll take it back to 45, 50. So for me, it just looks as though there was a nasty seller out from the IPO, and they're probably out now, and the shares just go up, with the seller out. But I mean, I'm not sure that that's based on a reality, but it looks a bit like that, whether it's just recovering the fundamentals or not. But the chart looked great, and it worked. Let's say worked for my video anyway. And I think it's a good combination of the chart, being the shares being too oversold, and also people appreciating the fundamentals of the company, which weren't appreciated before.
The other one I was sort of taking a notice of this week was Mila Resources, the Stevenson's family. So, I mean, basically Charlie and his dad, I think Charlie found the resource in the first place, to be honest. And then basically they took it upon themselves with the geologist down there. I mean, we interviewed them at Christmas, didn't we? But that has really grown with stealth. It hasn't gone crazy at any point. And it's now double its IPO price. IPO'd at 2.3.
Yeah, I mean, if you look at the results though, the mineralization extending at that coffee deposit, it's really nice actually. And they're waiting on further assays, but I don't think they can believe. And Neil's the guy, isn't he? Neil Hutchison is the geologist we interviewed, lovely guy. And I think he's basically blown away with what they found so far. So, and if it does extend onto the bordering, the neighbouring Kathleen Valley deposit, which is held by a major there, to the Bellevue deposit, then who knows what will happen? Is it a case of guys come and take us for X number of 50, 100 or whatever million? So the upside in this one is vast.
Yeah, I mean, you've got a market cap currently at 14.7 million, and I think for a buyout once proven gold resource to be 10 times that, I think is very practical. It's not like crazy amount of money. I don't know what you think, Zach, there, but I think that for someone to come and buy that for 50p, if they prove X 100,000 or 500,000 ounces of gold or more, then I think it's pretty likely.
Yeah, no, I actually spoke to the company ages ago. I don't know whether that was 3 months, 6 months, or whatever. It was a long time ago. And you obviously speak to companies all the time, so just sort of park that information. And then when it came to market, I just thought it's in a range 2p to 3p, and I could just feel it ready to break. And it did that this week. And for me, that looks like keep on going. So I think above 3p.
Yeah, they've got the warrants coming in now as well, 4.6p warrants that were given at the original thing. So you can start to say once it goes over 5p, people will probably start to cash those in, and they'll have more cash as well. So that allows them to move again, I think.
Of course. So there's another one on, and again, you'll know this one, Zach. You'll know it as well, Kevin. Was Sound Energy? They had the Tendrara phase. They're in Morocco. Sound Energy, as you remember, was run by a gentleman who we probably all know called James Parsons. Yes, him of the Golden Tickets Willy Wonka fame. And basically, the share price went from, the 5p to the pound. It's almost a chill type sort of. If you probably plot the chart from back in, what was it, 2000 and must have been 2010, 11, that year, probably around that time. And maybe even earlier, actually. It was probably around when the last crash, around 2008, 9. And it was meant to be the biggest thing ever, and they were going to be sold out. But basically, they've announced that the development's there and production concessions in place. And I think basically what they're saying is somebody wants our gas, basically, is what they've announced. And they've moved about 50%. They're still only around the 2.93 pence. There's like 1.6 billion shares in issue. So the market cap's around the sort of 50 million cap, but certainly looks like one that could really move as it gets back on the radar, and actually maybe people start to build up a trust back in the company.
Sounds interesting.
I'm not sure. I mean, after Advanced Energy, these sorts of, I hope it's not a binary bet. Chill, got goodwill towards the Milo one. I think is it looks great, and it's a roast type stock. So, and I think there's a sort of style to them now that you pick them out. And when I look at companies now, I put my Phil and Kevin hat on and sort of see what would they have your voices in my head. What would they think about this and what would they think about that? So that is good, especially on the mining area, obviously. So there won't be a roast next week, mainly because we won't be around. Kevin and I are going to do a site visit to a couple of those, so obviously we'll keep you in the picture on that. But you'll probably see tweets from site, etc. And we'll be back in a couple of weeks. But in the meantime, Zach, obviously, good luck with your venture, and obviously look forward to seeing how it performs this coming Friday when it goes live. And wish you all the best with that. No, it was very kind of you. I think it's although the fundraiser is over, it's actually now the tough work starts. So. Yeah. And I think with SPACs in general, there's a point to prove and to show that this is how it's done with the right messaging, the right acquisitions, the right everything else, the right team. There's all that sort of stuff to do. I suppose it's easy to pick holes in others when you're on the side, on the sidelines, but you've got to do it right in real life, and there's a responsibility there. And I take that, as I said, after 35 years of looking at the market, I take that very seriously. And you really need to get off on the right foot, the correct foot, and people judge you by that. And as I said, the responsibility of the shareholders is there, and I'm looking forward to living up to that responsibility.
Yeah, so, good luck.
Good. Yeah, good luck with it, and have a great weekend, gents, and enjoy your roast.
Thank you.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.